Good morning, welcome to this update on Tuesday the 26th of July, brought to you by Phoenix Blue. I'm Tom Colley and I'll take you through the markets and the news this morning. Okay, we've got, yesterday we had the German IFO business climate coming in with a positive number. That didn't have any significant effect on the euro itself yesterday. We are very much in the summer doldrums. Liquidity is limited, and we're also in a week that sees Wednesday night we have the FOMC statement that you can see there in the Fed's fund rate, and also on Friday we have the Bank of Japan, their equivalent. So there are probably a restricted number of traders in the market, and those that are around to trade are sitting on their hands certainly till after the Fed on Wednesday night. Going forward today, we have from the US, we have consumer confidence, and then going into the early hours of the morning tomorrow, we'll have the Aussie CPI. So what's happened in the last 24 hours? Well, overnight, we've seen a significant fall off in the dollar index, so dollar weakness showing through there, and we had been looking for either a break of this channel or the downward side, the break being dollar strength, the downward side being dollar weakness. This potentially is again down to a lack of liquidity pre-FOMC, etc., or it could potentially be expectation that the Fed will disappoint in terms of providing us with any further indication about any potential rate hikes. We saw that most dramatically shown in US dollar JPY, the yen exchange rate. Clearly this is a market that's more active overnight than the European currencies. We've seen a big strengthening of the yen there. I've got a zone marked in there, which is the next level that I'd be looking for support from. But in light of what's happened there, we had traders who were trading this short overnight, and they woke to a nice result there. But any further trades in that market will be pending both the FOMC statement and even the Bank of Japan on Friday. Naturally, we had a strengthening in the yen, so therefore we had a bearish move on the Nikkei 225 overnight. Again, we were in the same position. We were looking for a reaction at this level here through the top of the channel as to whether we were going to see dollar strength, yen weakness, and in due course Nikkei strength as well. And the other markets, the Australasian markets, reacted most significantly to that dollar move, again because these are more active. It's more their daytime session over there. So we've seen bullish dollar, and again bullish New Zealand dollar move there. The only other thing significant that wasn't directly related to the dollar overnight was Martin Wheel, who is a member of the Monetary Policy Committee at the Bank of England, indicated he changed his mind and now favours an immediate stimulus for the economy. The reason for that is twofold. Friday's services PMI figures, in his own words, shocked him somewhat. They were significantly lower than he anticipated. He's also concerned about weaker wage growth prior to the actual Brexit vote. So we potentially see that as being a bad position worsening following Brexit. Over on the Canadian dollar, and we'll go over to the WTI crude at the moment, we had a breakout of this level yesterday. As you can see, I've got a trade waiting there to take this long. So the counter to that is crude oil itself. Obviously the Canadian dollar very sensitive to crude oil. The sentiment on crude at the moment is that there is a greater oversupply than potentially the market was anticipating. We've got increased production with shale fracking coming back on in the States, rigs being started back up because of the crude price reaching up to these levels around $50 US. And we're also not far away from the seasonality when usage of fuel, particularly for cars, etc., come the end of the summer holiday period, drops off dramatically. So all those factors seem to be a downside pressure on crude. So again, you can see we've got a level there. I'm looking for a retest of that level to take it down to my next target around the $40 level. Okay, guys, that's it for today. As I said, liquidity and the upcoming central bank statements limit what's available to us there. We're still looking at commodities markets, but yesterday, like everything, they were somewhat stable. And boring, for want of a better word. Now, if you're interested in the way we trade, you like the fact we trade without indicators, we use fundamental analysis, commitment of traders analysis, seasonal analysis, and you want to take your trading to the next level, we're offering a 4-hour trading session in London on August the 24th. That'll be an opportunity to trade with our two most senior traders, ask as many questions as you wish, and find out about exactly what we do whilst actually trading any opportunities that are there on the day. If you're interested in that, either go to visit the website, phoenixblue.co.uk, or email us at info@phoenixblue.co.uk. Okay, guys, that's it from me today. We look forward to speaking to you later in the week. Trade carefully in the markets with this lack of liquidity and the upcoming central bank announcements. Take care.